do you get in return when you sell U.S. bonds? You get U.S. dollars. Can't buy the British pounds with U.S. dollars? That means you're going to have to convert your U.S. dollars to British pounds to take advantage of those more attractive UK rates. So when the interest rates are rising in a country, it often can create a flow of funds out of other countries and into the country whose rates are rising. Essentially, that fixed income fund would be selling the dollar and buying the British pound. And if that happens on a large scale, if all the funds start doing that, it's going to create a huge flow of capital out of the U.S. and into Great Britain. That's going to cause the Great Britain pound to rise against the U.S. dollar. Now, how can we monitor potential changes in interest rates? Well, there are futures contracts for the different countries that we're speaking about. These futures contracts tend to be accurate predictors of future interest rates. The reason for that is because there's real money behind these contracts. It's not some analyst saying, I think rates are going to go to this point or that point. It's real money that sets that rate. So if we follow those rates closely, that may give us some insight into the future of interest rates. In the United States, the Fed funds futures trade on the Chicago Board of Trade. This futures contract is a key indicator of U.S. interest rates. It gauges the market's expectation of changes in U.S. monetary policy. Now, if we look at this graph, on the left, you're seeing the month. Every month has a new contract. Second column from the right is settle. That's the most recent price. Now, it may look like a jumble of numbers to you right now, but it's really very simple. I'll explain. You simply take 100 and subtract the price quoted. That's going to give you the average interest rate